Without further ado, I want to give it up to Martin Diehl. He is going to join us digitally, and he will give a presentation on how CBDC can impact financial market infrastructure. He's from the Deutsche Bundesbank. Martin, welcome.
Thank you very much. I hope you can hear me, and you see my slides at least. I'm very happy to be here. This is a great conference. I would have loved to participate also in person to meet all those people and to have also an exchange on the floor. But I have to be a bit cautious due to Corona cases nearby my personal situation. I have to be cautious and stay at home. So, how CBDC can impact financial market infrastructure, what it is going to look like. Let's have a start by looking back what we have seen so far. The hopes were high-flying hopes. You see them in the green box here. Bitcoin created new money, but also a new asset class. There's still a debate going on. Is that something really new? We had a new electronic payment system, which was supposed to deliver P2P transactions all over, based only on cryptographic proof instead of trust. That was the idea. We wanted to get rid of intermediaries. I say we, but this is just a dream of some, I don't know. Get rid of intermediaries, no banks, no financial market infrastructure, maybe also no central bank. This was the idea of some. And code is law, you remember that. The idea that we could code it, what we want our system to be done, and base everything only on the code. The reality is a little bit more cumbersome in implementation. First of all, when financial market infrastructures or financial intermediaries started to adopt DLT and try to implement it in their system, this was the first shock because it wasn't designed for them to do so. I remember that a couple of years ago, people asked me, why do you as a central banker care for DLT? You are part of those intermediaries going to vanish. Well, this was the first shock, and obviously now everyone got used to it, that DLT is going to be applied by financial intermediaries. The implementation of DLT in finance is still in the infancies. There are many proof of concept, many pilots have been proposed, some really impressive. However, no major financial market infrastructure is running on DLT. I remember a couple of years ago, we all thought the Australian Stock Exchange would be the leader of the pack, but still the implementation has been postponed again a couple of weeks ago. You may have heard that. We're still waiting for a breakthrough on a large scale. And no crypto asset has turned out to become a substitute for real money. By real money, I mean central bank money or commercial bank money, which is based on central bank money. So, going further, why is that so? Why did it take so much time? Well, there were a lot of adaptations to be made to DLT and a lot of issues to be addressed. At the beginning, we talked a lot about scalability, but this is no longer an issue, however, only for the sake of implementing more and more centralized elements into DLT. There was a trade-off. More central settlement or clearing allows higher scalability. We have reached now a realm where we could say financial transactions would be possible to settle on a DLT basis. Look at the Project Hamilton. They reached something like 1.7 million transactions in a second. Fantastic number with the DLT. But it is not, of course, not a decentralized DLT as has been proposed by Bitcoin. We have the issue of finality. Financial markets need finality. We need to know when money really has moved from one owner to another one, or when an asset has moved, because he wants to use it, to sell it again, to use it as a collateral, whatever. finality offered by proof of work systems like Bitcoin is not sufficiently here. This has been overcome. We need confidentiality. Financial markets do not work with public ledgers in a way that everyone can see what everyone else has done. And we need traceability. The anonymous transactions, this is not the way we want financial markets to work in order for avoiding money laundering, in order for avoiding terrorist financing. Okay, there were other issues. The most important one, which I believe has long been neglected by some, of course, a good functioning code is something we are really happy with, which could help us solve many problems in economics. But real trust is always coming from outside. Trust is always based on real experiences. So we cannot get rid of trust. Code cannot solve everything here. More important, even more important, stability. We need stable money to settle all those assets. That's why stable coins came up, and now people think about CBDC, because we need stability for the money. We need compliance with all the rules we have in place, because we do not want to change the rules. We do not want to change our world to adapt it to the DLT. We want to adapt the DLT to fit into the world, and fraud prevention, of course. And we found out finally the DLT itself, or blockchain, whatever, is not preferable as a transaction technology itself. It is technically too slow and too costly. Centralized systems are always a bit faster and less costly. So, but we have advantages. What are the advantages? Let's look further. We still work with the DLT, also we do in the Bundesbank and in the Euro system. Why is that so? Well, the DLT has two major advantages, which I really put some hope in. It allows for an automated settlement by smart contracts. Smart contracts are, in my eyes, the most important invention in the whole field of DLT and blockchain. They came only into existence after Ethereum was created, though the Bitcoin is not really a system allowing smart contracts in the narrow sense of the word. And they would support our economy by allowing the automated settlement of a lot of complex settlement where we have a high division of labor. There are many, many companies involved in simple processes. And if you could code that, if you could automate that, repeated processes, then a lot of manual intervention would be saved and a lot of settlement would be faster. And the second aspect is with the DLT, with using the joint database, partners could rely on this single database, and reconciliation would simply become redundant. This would save a lot of back office costs in industry, not only in financial industry. So the DLT could, by using these two features, support the creation of what we call a smart economy, where people are connected to the utmost extent possible, where information are available, where we can reduce repeating manual intervention to the utmost limit, because they are automatically performed. So now, what is the point of money here? No, wait 1 minute. Oh, thank you. What is the point of money here? What is our task as central bank? We should support that smart economy by providing some sort of money that the process could also, that the cash leg of the whole story could also be settled automatically. In a smart economy, a synchronized flow of goods and money should be facilitated to the largest extent possible without foregoing stability. So if we can, we should at central bank support that automatic settlement by creating something which we call programmable money or programmable payments. Okay, now let's move. Yeah, so our financial market have been entered that field to a large extent. I mentioned already a lot of proof of concept, a lot of consortia and joint ventures were done for cooperative research. We are seeing a really benevolent legislation process in not only in Liechtenstein and Luxembourg, also in Germany, which facilitates the tokenization of assets, CE security, and we believe that some sort of wholesale CBDC or a trigger solution would support that process, would enable that service or augment it in a way. Let's look at the examples. What do we have here? I put up in the next slide some examples. What is going on at the market? On the upper side, the cash settlement, on the lower side, the security settlement. And of course, since securities are much more complex, this is a field where DLT can bring up its benefit really to the market because it is designed to support complex settlement, the automated settlement of complex treaties like in securities, where you have a lot of capital market transactions, where you have a lot of capital actions. So we see a lot of cases where DLT is applied, and it's not only the small ones, the fintechs. These are the big names on here who work on using DLT for financial markets. And in addition, look at the next slide. The real economy also wants to use the DLT for those aspects like machine-to-machine payment, pay-per-use, and Internet of Things. You see some names here. It's only looking at Germany, but this was for a German working group. Internationally, there's a lot of things going on, especially, let me name, the use of DLT in the real economy, for instance, logistics, in chemistry, in transportation, is much, much more intense than in finance. Why is that so? Well, finance is a heavily regulated industry and in part dominated by public actors, central banks, financial market, infrastructure, or at least publicly overseen. The real industry also wants to use DLT and also wants to use the DLT as a settlement technology, and also needs some sort of cash, of tokenized cash, and for large value payment, some sort of tokenized central bank money, because large value payments ought to be settled in central bank money in order to be on the safe side. So, what solutions do we have? Let's go on. What solutions do we have for tokenized central bank money in order to settle the cash leg of large value transactions, of a DLT-based transaction, also in central bank money? Besides tokenized central bank money, which is a wholesale CBDC, there is the idea of a trigger solution. We have on the right side, you see the payment system, for instance, our RTGS system, Target2 in Europe, which offers safe and efficient settlement in stable central bank money. But there is no way to execute a smart contract based on Target2 or within Target2. On the other side, you want to apply the DLT for the automatic settlement of complex treaties. And you need somehow programmable money. So we have a gap between these two aspects. We call it one the asset side and the other the cash side. We have to bridge that gap. Either you have tokenized central bank money or you build a trigger solution, which could be something like a technical bridge between those two systems, which I explain in the next picture. So the basic idea of a trigger solution is that between the asset chain, where any sort of asset, like a security or whatever, chemical goods or services are traded, and between the asset chain and the payment system, which is very below Target2, there should be a bridge. We built that bridge in an experiment together with Deutsche Bundesbank last year. We call that it has two elements. One is the so-called interoperability mechanism. In our case, the interoperability mechanism was provided by the Deutsche Bundesbank as a so-called transaction coordinator. And the second part is a trigger chain run by the Deutsche Bundesbank. What does it do? Well, the transaction both work simply as a smart contract. The transaction coordinator is basically like a virtual notary. The transaction coordinator blocks the asset token from the seller before it goes to the buyer, and initiates or triggers a payment instruction. That's why we call it a trigger solution. And the payment instruction is sent to the trigger chain, read by the smart contract over there, and is signed by the banks of the buyer in that case. So Bank A would sign the payment instruction if the corporation X is buying an asset from the corporation Y. And we see, the Bundesbank will see, oh, Bank A has signed it. Then we forward that payment instruction to target 2, settle the cash in central bank money, and report back. Payment has been settled in target 2. This report is signed by the Bundesbank and seen, recognized by the smart contract, by the payment, by the transaction coordinator. Sorry, and then the asset token is released to the buyer, to the corporation X, and changes ownership. So we have 2 steps here. It is not done in an atomic millisecond, but this is in DVP in an economic sense. The asset token changes ownership if and only if the money changes ownership. And the money changes ownership if and only if the asset token changes ownership. In the case that the money leg is not completed, that, for instance, Bank A does not have enough money on their account, the Bundesbank would report back the failure of the money leg, and the asset token would release back to the seller. By building such a bridge, what does it do? Well, it would facilitate the settlement of the of the cash leg of a DLT-based transaction in central bank money, which is important for large value payments, without creating tokenized central bank money. Money would not leave the central bank system. Money would not leave target 2 here. The only thing what moves is a payment instruction signed either by corporation or by the bank then later, and the confirmation of that payment instruction signed by the Bundesbank. Money would not leave target 2, but the asset could be traded on a DLT with all the advantages that you have a joint database, that you could use that smart contract, that you could add other chains related to that to forward the asset or to further apply that in a whatever you mean production process, or if it is a security, to further use it as a collateral, and so on and so on. So we would like to bridge between the DLT and the conventional payment system. The second advantage, the second advantage is the payment system stays as it is. It is compliant from scratch. The third advantage, this is more from a central banker's view, we would not have any impact on monetary policy implementation. We would not have any impact on financial stability. World in payments stays as it is nowadays. And the fourth advantage, possibly if we enter into that field, we could build such a system very fast, much faster than the CBDC in a way. So this is something we consider to do not only in the Euro system, but also elsewhere for the future. So let's peek into the future. What could it look like? What could be a possible outcome in a couple of years? Move to the next slide, please. Thank you very much. Well, I would believe that RTGS system largely remain unchanged. We believe that wherever new RTGS systems are created, these are very long-term projects. You may be aware that this Euro system now has a big project merging Target 2 and Target 2 security. This is a project over a couple of years, And it has a lot of new features, more safety, ISO 20020 compatibility, and so on and so on. It is not designed to apply DLT, but with something like Trigger, we could connect it to the world of DLT. The same holds, for instance, for the Bank of England. They are building a new RTGS system, and they will possibly, or not possibly, they will create some entrance door into RTGS. The RTGS system itself is not run on DLT. There, they decided against it when they started. They started later than our consolidation project, but it will have some entrance door. But the system itself will remain unchanged. And the central bank money will remain in that system because central bank money is always a claim on the central bank. And it is always a problem a bit if central bank runs outside of central bank money because of the reputational risk for central bank. I could come otherwise, but this is something I think has a large probability to occur. We are considering retail CBDC. You may be aware of our big project of the digital euro. And of course, the retail CBDC is designed as a complement for retail payments, not to substitute for cash. Cash will also be available, and other forms of commercial bank money will be available, but retail CBDC should complement that on the retail scale. However, the settlement of large value payments, especially when it involves a DLT-based transaction, that could be done via either a wholesale CBDC or a trigger solution in central bank money. That is something we should facilitate for the future to allow for safe settlement. Of course, if we settle in DLT, then settlement of securities would be possible in T+0. And T means the day, or could also mean the minute. We could settle both legs in the same minute. This would create a lot of more securities, reduce the risk, and save a lot of liquidity in the market. If we save in T+0, then CCPs would lack their business case. We would need CCP still for derivative with a longer term duration. Well, other features could be changed, like CSDs and cross-border transactions. So this could be a peak in the future.
Martin?
The only need is to create some sort of connection to our current payment system. Thanks very much.
Oh, okay, yeah. Thank you very much, Martin. A huge round of applause for Martin Diehl.
Thank you.